12%. That is the annualized rate strategy is paying holders of its Strc preferred stock this month, and yet those very shares are still trading below their stated value. Think about that for a moment. In a market where investment-grade corporate paper pays a fraction of this, a double-digit monthly payer is sitting at a discount, and the market is effectively telling you it does not believe the risk is worth the reward. On Friday the 31st of July and into Saturday the 1st of August 2026, Strategy confirmed it would keep the August rate on Strc pinned at 12%. No increase, no cut. For Michael Saylor's company, that number is not a boast. It is a signal of exactly how expensive capital has become for the largest corporate holder of Bitcoin on the planet, and in the next few minutes we will unpack precisely why. First, the mechanics, because Strc is not an ordinary preferred share. Strategy markets it as short duration, high yield credit. It is a perpetual preferred stock with a stated amount of $100, it pays monthly rather than quarterly, and crucially the dividend rate is variable. The board resets it each month rather than locking in a fixed coupon for life. That design was deliberate. The rate is meant to float upward or downward to keep the shares trading close to that $100 mark, giving holders something that behaves a little like a cash equivalent while paying far more than cash. Strc sits alongside Strategy's other preferred issues, Strk, Strf and Strd, in a stack of instruments the company has used to raise money without simply issuing more ordinary shares. The catch is simple. Every one of those instruments carries a dividend obligation that must be funded in dollars, not in Bitcoin. Now look at the trajectory, because it is the trajectory that matters. Back on the 1st of April 2026, Strategy held the Strc monthly rate at 11.5%. 4 months on the 1st of August 2026, the company has held it again, this time at 12%. The direction of travel over that period has been upward, not downward. Under the design of the instrument, a rising reset rate is the tool used when the shares slip below par. You raise the payout until buyers step back in and the price recovers. So the fact that the rate has been pushed to 12, and that the shares are reportedly still trading beneath their stated value, tells you the mechanism is being stretched. The market is demanding a higher premium than the rate ladder has so far delivered, and that gap is the story. There is a second development running in parallel, and the two are connected. As of the 29th of July 2026, Strategy had gone 5 consecutive weeks without buying any Bitcoin at all. For a company that built its entire identity on relentless weekly accumulation, and which for years announced fresh purchases with almost metronomic regularity, a 5-week pause is genuinely unusual. It matters because the buying was funded by issuing securities. When the share price and the preferreds trade at levels that make issuance expensive or dilutive, the machine slows. A treasury company that cannot raise cheap capital cannot keep buying. So the 12% dividend hold and the buying freeze are 2 readings from the same instrument panel. The cost of money has risen sharply for Strategy, and the company appears to be choosing discipline over volume. Zoom out and the pressure is sector-wide. At the end of July 2026, reports circulating in the financial press described enormous net losses recorded across Bitcoin treasury companies, with Strategy at the center of the accounting. Under current fair value rules, these firms mark their Bitcoin holdings to market every quarter, which means a falling Bitcoin price flows straight through the income statement as a headline loss. Those losses are non-cash, and it is worth being precise about that. They do not directly drain the bank account. But they do shape sentiment, they affect covenants and credit perception, and they make it harder to sell new paper to institutional buyers. When your reported net loss runs into the billions, convincing a pension fund to buy your perpetual preferred at par becomes a much harder conversation, however attractive the coupon looks on a screen. So what does today actually mean if you hold these securities? If you own Strc, you are being paid handsomely, at an annualized 12% on the stated amount, delivered monthly. That cash keeps arriving as long as the board declares it. But you are holding an instrument priced below par, which means the market is pricing in real risk to that stream. If you own the ordinary Mstr shares, you sit behind every preferred holder in the queue. Each dividend paid on Strc, Strk, Strf and Strd is cash that leaves the business before common shareholders see anything. And if you are simply a Bitcoin holder watching from the sidelines, the relevant point is demand. The single largest corporate bid in the market has been quiet for over a month, and that absence is felt in thinner support on the way down. Looking to the near term, the next decision point is the September 2026 reset, and there are really three paths. If Strc recovers towards par, the board has room to trim the rate back below 12 and reduce the cash burden. If the shares stay stuck at a discount, the pressure will be to hold at 12 or push higher, which raises the annual cost of servicing the stack. And if Bitcoin rallies meaningfully, the entire calculus loosens, because Strategy's ability to issue equity and preferred paper improves immediately. The signal to watch is not the dividend announcement itself. It is whether Strategy resumes Bitcoin purchases. A return to weekly buying would tell you the capital markets have reopened for them. Continued silence into the autumn would suggest the funding window remains shut, and that the 12% is a ceiling being defended rather than a strength being flaunted. Here is the one thing to carry away from today, Sunday the 2nd of August 2026. A 12% yield is not generosity, it is a price. It is what Strategy currently has to pay to keep investors holding its paper, and the fact that the shares still sit below par after that rate was set is the most honest number in the whole announcement. Watch three things over the coming weeks. First, the September reset rate and whether it moves off 12. Second, whether the Bitcoin buying resumes after 5 quiet weeks. Third, where Strc trades relative to its $100 stated amount. Those three data points will tell you more about the health of the Bitcoin Treasury model than any press release. Yields this high are always telling you something. The skill is in listening to what